Everyone, and let's dive in here. So this is really a research study that started for me in understanding swing trading, and this is really a what I'll call a composite swing trading filter. So when you look at swing trading the markets, this is a really fascinating indicator. And to give you a little background on myself, I'm always researching because that's what I did for 20 years with hedge funds. So I'm always researching different indicators and different strategies in the markets. And this is one that was really, has become one of my favorite indicators, but really fascinating research study. And I'll share exactly what I discovered in this presentation. So thanks, Jeanette. And let's go ahead and dive in so I don't go over my hour here. So it's titled How to Potentially Predict Big Swings in the Markets Using Nature's Own Golden Ratio. A little bit of a strange title there, but you'll understand where that comes from. Now, for those of you who don't know who I am, I've spent my career as a senior strategy developer for hedge funds. I've been blessed to be a part of a couple of Star Search hedge fund winning teams based on our real track record, and I've also been a speaker at various events, including past TradeThirsty events and Bloomberg international events and whatnot. So that's my background. Have focused my entire career on technical analysis and really using charts to not only develop indicators to predict and identify and predict trading opportunities, but also to trade them as well. Now, quickly, let's just cover the standard risk disclaimers. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. Pretty much common sense stuff there. Also, hypothetical results, CFTC rule 4.41 simply states, hypothetical or simulated performance results have a certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. So understand that as well. Now, by the end of this presentation, you will see here, make sure my slides are advancing here. By the end of this presentation, you will look at this slide and you're going to understand how you could have identified each one of these swings in real time as a swing worth trading. So and you'll understand how to use a very powerful filter to know when you could potentially look at upswings or downswings in a market. So, and I'll show you exactly how this works. All right, so let's go ahead and dive in. How much is it worth knowing when prices are going higher or lower? It's really the essence of trading, predicting where prices are going for a market. So it's really what we're all after, stating the obvious. Now, price chart patterns are a powerful tool to predict where markets are going. If you're new to trading, and I know a lot of people don't understand really what price charts are in terms of they're not only a past history of where buyers and sellers have transacted business, but they're also very powerful tool to understand the strength of buying and selling. So they're like a gauge you can use, and they're a history of where a market's traded as well. So picture that in your mind. It's not just random. It can be a very powerful predictor of the force, the strength of buying and selling. Now, some of the best predictive chart patterns are based on price cycles. So let me just dive in. Now, if you're experienced with swing trading, this is really basic for you. I promise I'll show you something you haven't seen before, but just covering this quickly, when we talk about swing trading, what we're talking about essentially is trading cycles. So this would be a situation where you have an upswing. Our goal as a swing trader is to get into the trade as close to the cycle low and then profit from the upswing of the market and then get out as close to the cycle peak as possible. So stating the obvious there, that's what swing trading is. The other thing I'll tell you about that we've got to make sure we understand when we trade in the markets, and especially swing trade, is understand the idea of what we'll call shelf life. So if you look back at any cycle indicator, if you're seeing a market that has fairly well-defined cycle swings, then you have to understand that they don't last forever. So you have to understand the idea of duration. How many price bars do I expect the up cycle or down cycle to last? That's number one. And then how far do I expect a swing in a market to travel? It's really important to understand both of those, and they're finite. So you have to understand that it's a opportunity that has a shelf life, and you need to be very aware of that, because if we try to jump in early, that's a losing proposition. If we overstay our welcome, stay beyond the shelf life of the trading opportunity, the swing trading opportunity, that's also a losing proposition. So buying on the upswing, if you will, in this example, that's where the odds in theory are really mostly in our favor. Now, the opposite of that is to short a market. Selling short gives us the opportunity to profit from down price moves. Buying put options does the same thing there, but our goal is just the opposite. We want to start selling as close to the cycle peak of the cycle, and then we want to get out of our trade as close to the cycle low. So this gives you a visual here. Now, when you talk about swing trading, we are never going to hit the exact, enter at the exact peak and get out at the exact low. We are going to essentially try to capture 50 to 70% of the move, realistically. And then down cycle swings as well, they have the same shelf life, duration, and magnitude. So when you look at duration and magnitude, the best way to define that is to look at what a market's done historically. So you can determine, like for example, on a daily chart, you may look at the cycle in the past and say the average upswing or downswing lasts for 8 to 12 days or 8 to 12 bars. It could be a 60-minute chart, it could be a daily chart, but it's the number of bars. It typically lasts, downswing or upswing lasts. The second part of that equation is how far to expect a market to move. And buyers and sellers have finite resources. So it's not, there's a predictable move you can determine for most market and time frame combinations. So that's really important to understand both of those. Now, as we talk about this, we're talking about the opportunity, defining the swing as the opportunity. I'm going to show you an idea in a few minutes that actually defines where we buy and sell. So there's two different things here. Think of the opportunity almost like as a fish finder. When you go fishing, right, that's different than catching the fish, right? So the opportunity, the swing opportunity, is one aspect of trading, and how to actually profit from that, where to buy, where to sell short, where to enter our trades, where to place our risk stops, and where to exit, that's a separate matter. So I'll cover both of these in the presentation, but when we talk about cycle swings, we're talking about the opportunity first and foremost. Now, swings in prices are, again, the opportunity or the pattern to trade. Traders can profit from upswings placed by placing buy orders, stating the obvious here. So in this case, this is a chart of Amazon, 120-minute chart here. And this upswing that you see on the chart here, you can see from the cycle indicator below, this is defining an upswing, and the max profit potential here, trading 100 shares of Amazon, in this case, is $6,500. So we're not going to get all that, but our hope is to get 50 to 70% of that upswing, if you will, when we identify this opportunity. My indicator here at the bottom, let me introduce this. This is a cycle indicator. So anytime we're swing trading, we have to have some sort of way of modeling or identifying price cycles in prices. And typically this is done by cycle indicator. This is my own custom cycle indicator, but most trading platforms will have cycle indicators that you can use. So this is my tradable cycle as I define it here in my indicator subplot, my cycle indicator telling me or showing me approximately when to expect up cycles and down cycles here in the market. Now you'll notice here there's noise sometimes. It's not a perfect science. It's like part art, part science here, but in general, we can eyeball it and see a general up and down cycle in the market, right, over time. Sometimes it's better and sometimes it's worse, but essentially this is how it works, right? So you have to have a cycle indicator. And the other thing I would tell you, as you study charts and as you study trading opportunities, a cycle indicator like this gives you a wealth of information. And I would tell you that when you study the details of a good cycle indicator, you'll notice that it contains really a tremendous amount of information. So in this particular case, you'll notice that the previous upcycle peak shows the buying strength. The fact that the cycle came down and bottomed out right around the zero line tells us that the buyers are a lot stronger than the sellers. And then if you look at the timing of this, it's not unusual when you see this kind of pattern play out to find that the follow-on cycle can be incredibly profitable, or it can be a high profit setup or pattern to trade in the market. So I'm not going to get into this too much in today's presentation, but when you're looking to study the details of a cycle indicator, I'm here to tell you that there's a ton, really a wealth of information that you can get from this using the indicator by itself. Now, the flip side of the equation is traders can also profit from downswings by placing short orders or selling short as well. Yeah, Mark, this does these indicators that I build are really across all platforms, but I can talk more about that here in just a minute. This is an example of a Amazon 120-minute chart. Again, you can use daily charts, you can use weekly, and some time frames are better for identifying cycles than others. So you need to check a number of different time frames, but a 120-minute chart for stock sometimes is a very good time frame. In this case, you can see the cycle peak starting, and then notice that the peak unfolds right around the zero line, and we see the down cycle here. For 100 shares of Amazon, this represents about $15,000 worth of potential. Again, we're not going to get that exact amount, but if we can get 50 to 70% of that, then we're happy. And you can see the downswing here. This is the opportunity, and I'll tell you again, I'll share an idea later how you can know where to sell it, where to get in, where to get out of your trades. But this just talks about the general aspect of swing trading. And again, I'm going to get into the unique trading filter, this powerful indicator here in a second. So if you're an experienced swing trader, you're going to see something you haven't seen before. So trading upswings and downswings in the markets is, no surprise here, called swing trading. Some of the advantages are as follows. Swing tradings represent really good profit opportunities. Part of the reason for that is they occur very frequently. So it's one of the most frequent setups you'll find in the markets. Unlike, for example, a head and shoulders pattern it's a technical pattern that some traders follow, but I can't tell you the last time I've actually seen one. So there are some other patterns out there that may be good at predicting where prices are likely to go, but they appear so infrequently that you really can't make a living off of them, or they may not necessarily be the bread and butter of your trading strategy. So swings are around all the time, and they happen across all time frames. So you could be a day trader and use this powerful information to identify trading opportunities. You could be a swing trader who really trades for a couple day period, like 3 to 5 days or 8 days, and then you could be longer term as well. So some of the really good swing trading opportunities occur on weekly and monthly charts as well. Now, when I dove into this research, this was kind of something I tinker with, and if you guys follow my videos, you'll know that I'm always tinkering and trying to find new and powerful ways to analyze markets. So with this particular project, I was asking two questions. And one was, what is the best tool to track price swings? And I'll talk to you about that. And that's not only the tool, but also the settings, which is kind of an interesting approach here. And I'll share that research with you. And then number two is, how do we know which price swings are the best ones? How do we know which ones to trade? And that's a harder question. And I'll show you an answer to that. So one of the questions are, hey, Boris, one of the questions is, will this work on crypto? And the answer is yes. So price swings, this type of analysis, crypto is probably one of the more pure markets that's really driven by supply and demand. You may hear people talk about, well, crypto can be manipulated, but we see that. We will see it on the price charts when you see large sellers or large buyers come in, but crypto can be a really good market to look at for these swing trading patterns as well. So let's hit question number one here. What is the best tool to track price swings? Now, cycle indicators are designed to detect price swings in the markets. No surprise here. These cycles, up and down swings, often represent excellent swing trading opportunities. But what is the best way to create a cycle indicator? Now, most platforms will have different indicators you can use to track cycles. Like stochastic oscillator can be a decent one to use, but part of the answer for my question here is not only an indicator, but also the settings we use for the cycle indicator. So this is my custom cycle indicator. If I showed you the code behind this, you'd be shocked at how simple it is. So it's very, very simple indicator, but what I wanted is I wanted two settings. I wanted to be able to modify the settings to make it a shorter term or a medium term or longer term focus. And I'll show you why that matters here in a second, but there is a sweet spot. So as you check the different settings for an indicator, there can be settings that are much more effective than others. So this is Netflix 120-minute chart here. I apologize, this is actually Apple or Amazon, so I need to change that. This is Amazon 120-minute chart here, but you'll see that the swings are relatively well defined. So 120-minute with my settings of 5 and 8, I'll show you how I came up with that here in a second, identifies a pretty tradable cycle. So the question is, what if there is a way, and I'm taking a little bit of a turn here, and I promise I'll explain why I'm doing this here, but I was asking the question, what if there's a way to incorporate Fibonacci math in my settings of my cycle indicator? is it possible that Fibonacci math can help us build a great cycle indicator by identifying some potentially powerful settings? And so when I was asking this question, I asked, can a Fibonacci cycle indicator uncover market cycles using what's called the golden ratio? And the answer is we can build a Fibonacci-based cycle indicator that uses parameters from the Fibonacci sequence. So if this sounds complicated, it's actually really not. So if you look at and I'll show you how this works. If you look at the Fibonacci sequence, there's really just a series of numbers like 1 plus 2 equals 3. 2 plus 3 equals 5. If you're new to this, 3 plus 5 equals 8. So it represents a growth rate, right? The sequence does. And the reason why it's interesting and powerful is because we see this pattern in nature, right? So if you're looking at the settings for the cycle indicator, I'm looking to use 2 sequential numbers. One of my favorite settings is 5 and 8. If you want a longer term setting, like a medium term, maybe you could use 1321. If you want a long term, I could use like 5589, right? So the sequence keeps the ratio, the growth pattern intact and keeps us consistent on the numbers we select when we identify a shorter term focus or medium term or long term. So what is the golden ratio? It's a number ratio that's equivalent to approximately 1.618. For example, the larger number divided by the smaller number, right? Like if you add 5 and 8 together, you get 13, and 13 divided by 8 is approximately 1.618, or 21 divided by 13. So so if you look at the Fibonacci sequence, it grows at a rate of 1.618, especially as you start getting to the larger numbers. Why do we care about this? Now, this is one of those things that's kind of interesting because we see this occurring a lot of times in nature. Like, for example, if you're walking along a beachfront and you find a shell, the rate at which a shell expands around the center is approximately this 1.618. Or if you look at insect populations, the rate at which they grow is, for many of them, 1.618. It's really interesting. So I thought that this would be an interesting number to use in terms of tapping into potential behavioral patterns that we might find beneficial, right? And I found that it actually works pretty well. So my team and I looked at this and determined that the parameter settings using the Fibonacci sequence are actually pretty interesting, when we use this. So the Fibonacci golden ratio, we thought, was pretty effective in revealing market cycles, either short-term, medium-term, or long-term. So here's an example, again, Amazon daily chart. And you can see here using the 5/8 settings, a little hard to see because the font size is small, but it does a pretty decent job of identifying cycles. Now, sometimes you get a little bit of noise in there or impulse waves, but over time, it's really not too bad, especially near the right side of my chart. So understand that cycles sometimes, unfold very, very beautifully. Other times there's a little bit of noise in there, but that's just real world trading. And you'll find that some time frames and setting combinations work far better than others. Here's Google 60-minute using the 813 settings, and you can see a fairly recognizable cycle. And again, where the cycle peak is unfolding can be incredibly powerful. Like, for example, in this case right here, we see the sellers pushing the cycle low below the zero line, and then the buyers are not able to push the cycle peak much above zero line, which tells us the sellers are much stronger than the buyers. And sure enough, here you see a pretty big sell-off here. So the cycle indicator in and of itself is a wealth of information. But again, here's a 1321 setting on gold 120-minute chart. It detects a fairly decent cycle. Here's another example, US 30-year bonds futures using a 5/8 settings. Again, seeing a lot of a fairly readable cycle. Now, when you look at the cycle itself, understand that if all things are equal and buyers or sellers are equal, you're going to see the cycle oscillate evenly above and below the zero line. When you start to see the offset cycle lows and highs, this tells us a lot about the strength of buyers and sellers. Right here, the cycle low coming in right at the zero line tells us the buyers are much stronger than the sellers and gives us that potential upswing to target. Over here, you see the cycle low coming in above the zero line, and sure enough, after that, you see a very strong upswing pattern. So even by itself gives us a lot of very powerful information. if you're interested in studying charts and finding these, imbalances of supply and demand, that's really what technical analysis is all about, is trying to find where the buyers are much stronger than the sellers. This is absolutely one of the most powerful ways to do it. So using the Fibonacci golden ratio, we created an effective indicator to uncover cycles in the markets. Our Fibonacci cycle indicator is an excellent tool, and that goes to the settings really more than the code itself, but tool to track cycle swings. Now, let's get to the meat of what we're here for and the exciting part of this. How do you know which price cycles to trade? That's a harder question to answer, and this is really what I'm sharing today. And this was really fascinating. When we see that swing trades offer excellent profit opportunities, right? That's clear in the markets. But how do we know which swings to trade? That's a harder question to answer, and I'll show you a really powerful tool to help us answer that question. Our research uncovered an answer to this question, and before we go there, it's important to understand that cycles occur across all time frames. That's why it's one of the best setups. For example, you can have tradable cycles on a 60-minute chart. Like here's a QQQ NASDAQ ETF chart, and the cycles are really well defined using the 5/8 settings. You can view the tradable cycles below and see that there's a lot of very well defined cycles. You can use a 120-minute chart. That can be very well defined as well. This is on Amazon, and visually we can see that there's a fairly well defined cycle in this time frame. You can also use daily, weekly, and monthly charts as well. Now, this is one of those things where I would challenge you guys as traders, if you're not one who's looked at like a longer term price chart, I would challenge you to do that. So let me go ahead and show you an example quickly on that and why that's important to do. So for example, a GameStop is a stock I've been bearish on. All right, so this is one we can see on the 15-minute chart, shorter term, that there's a lot of sell-off here, and this is information that we can see a lot of offset cycles here, over the last really couple of days that have given us some nice buying and selling opportunities. But this is let me give you an example of Tesla. So Tesla, I created a members video saying that I was incredibly bullish Tesla, and the reason for this, let me show you on the weekly chart, is because what I was seeing unfold on the weekly chart was incredibly bullish. So right here, I made a video, right? I'm watching nothing more than where the cycle was coming in, cycle low. It's a little bit hard to see here. In fact, let me go back in time just a little bit, but study your weekly charts, guys, because they pay massive dividends. So right here, I said Tesla is looking very bullish, likely to go much higher. And why did I do that? Well, look at where the cycle low is coming in. If nothing else, we had a strong cycle up move. Cycle low was timing right around the zero line, told me the buyers were a lot stronger than the sellers, and projected that Tesla was likely to go much higher. So that simple, reading of supply and demand can be incredibly powerful. Here's another example. What about this low, cycle low coming in above the zero line? That's a great setup that I track. And this is one that projected that Tesla would have a really big up move. So I show you this only to tell you that it's time well spent to track your weekly and monthly charts as well. Some of the best trading opportunities I've found out there are offset cycles from these longer term time frames. Here's a daily chart of US Treasury bonds. You can see here a very well defined cycle. Now we know that single cycle swings can be profitable. All right, we know that. So what if there's a way though? Now we're getting the good stuff. What if there's a way to track and trade short-term, medium-term, and long-term cycles all moving in the same direction? So it's almost like composite swing trading. And there are cycles moving across all time frames. It's almost like the ocean tide. You've got the really long-term ocean tides that are governed by the moon cycles, and then you've got the daily high tide and low tide, and then you've got the waves even within that. So the markets are very similar, or you can have a longer-term upswing or downswing, and then like an intermediate term, swings, and then the tradable cycle is your shortest term. So in this particular case, we now have, I'm using the same indicator here and plotting it 3 times on my chart, but I'm changing my settings to capture short term, which is my tradable cycle, the one I've circled at the top, the medium term, we'll call it, intermediate term in the middle, long term here at the bottom. And when all of these cycles are heading the same direction, this uncovers potentially some of your best swing trading opportunities. So this is really interesting where you're just increasing the odds potentially of a trade either in the up or down direction. So this is with gold, using one gold contract gives us a potential trade of $5,000. But not only that, if you look at what happens here, almost every single day in this up move is higher, almost without exception. There's a few days that are not, but most of the days it's up, up and away. So very, very strong upswing here, and a very, I wouldn't say easy trading opportunity, but kind of an easy trading opportunity there. Now, what if we track Fibonacci cycles across multiple timeframes, just like that? Could we wait until a number of cycles are all moving in the same direction? And could this be a great way to determine what the best cycle swings are for a market? It could dramatically potentially increase our odds of a winning trade. So right here's another example in gold. So right now you see when all three time frames, short term, which is my tradable cycle at top, medium term, long term, are all heading downward, you see another nice swing trading opportunity to the downside. Now I'm about to make this a lot easier with introducing a very exciting new indicator here, but you get the idea. So this was part of my research challenge. Now for the challenge here, basically, let's take a look at what's really an interesting question, what ends up being a very exciting new indicator. What if there is a way to create a single indicator based on market cycles, based on Fibonacci math, to show the direction of price swings across multiple timeframes? Now, this was something that could have ended up with just a mess or crash and burn, you know, where I could discover an indicator that has very little use. Now, I didn't know what to expect here, to be honest with you. So this would, in theory, conceptually be almost like a composite swing trading indicator, trading swings that happen at the same time across multiple time frames. This could dramatically increase the odds of profitable trades. So creating an indicator that tracked multiple short-term, medium-term, and long-term Fibonacci price cycles. Why Fibonacci? Because Fibonacci guarantees that my settings are consistent. Why? Because we're using the golden ratio. We're using that growth rate, whether it's long-term settings, medium-term settings, or short-term. And that ends up being, I think, incredibly powerful in terms of how we approach this. So I decided to call this indicator the Fibonacci Cycle Composite. The Fibonacci Cycle Composite tracks cycles across 5 different time frames. So let's take a look at what this looks like. The top cycle, again, is my tradable cycle. This is defining my shelf life. This is defining where I want to start buying and where I want to stop buying for an upswing, or where I want to start selling or stop selling for a downswing. Why do we use that as our tradable cycle? Because we're able to keep our risk. This actually allows us to minimize our risk compared to the other cycle timeframes. But let me show you how this works. So the top cycle is our short term. Put an S over that. The next lower cycle is what I'll call short medium. So it's kind of a hybrid between short medium time frame. The middle green cycle is medium. The top magenta is medium long term. The very bottom magenta here, I'm sorry, is long term. Put an L there. So there's 5 different time frames of cycles we're tracking here with short term, medium term, long term, and combinations thereof. And the goal here is to create a composite of what all of these cycles are telling us within a single indicator, and that's what we get at the bottom. Now, when I first saw this, I thought it was really interesting because this gives us a wealth of information about what's happening across a number of time frames. And so this is now, I'm just showing you the Fibonacci Cycle Composite. And by the way, I'll take questions here in just a minute, guys. This is showing you now this composite of the 5 equally weighted cycles, if you will, built into a single indicator. Now, just when I first saw this, what I thought was really interesting is that when it's green, it's telling us that it's bullish, and that happens here during a fairly strong up move in the market. When it's red, you know, during the first phase here, there was a big drop in the market when we had a red reading from all these cycles, and then it went back red again near the end of my chart, and then it went back green again for the final last part of my chart. Now, the other thing that's really interesting here is that you see some detail in here. So if you look at the Fibonacci indicator, if you're a market nerd like I am, or a charting nerd, you'll notice that there's like almost like a little bit of a readable cycle in here. What's really interesting is that you'll notice here that when I see a cycle low that's well into positive territory as defined by the Fibonacci cycle composite, look what happens after it. So the cycle low happens, a lot of times you get really powerful upcycle swings. Here's a positive cycle low in the Fibonacci cycle. Then you get a powerful upswing. Here's a cycle low in the Fibonacci cycle composite. And these are positive and green. You end up getting a fairly strong upcycle move. Now, what about red and negative? So over here on the left side of my chart, we get red and negative here. What do you see happening? Strong down move. And these are cycle peaks. Now, cycle peak that's red and negative, you get a strong down move. Red and negative, strong down move, right? So it's really interesting from that perspective that within the details of this indicator, there's a lot of information that's telling us here. So when the majority of Fib cycles are swinging higher, then what do we want to do? It's like a filter. So this is our trading filter, and I'm going to show you this combined with the tradable cycle here in a minute. But this is telling us we got to focus our attention on the upswings when it's green and positive. What about when the majority of Fibonacci cycles are swinging lower or showing us that the long-term cycles are going down? This shows up as red on the Fibonacci cycle composite, and now we're looking to focus on down cycles. So it ends up becoming a very powerful filter on which direction to trade cycles. A powerful swing trading filter to show the composite cycle swings for any market and time frame. This is by far one of my favorite indicators, on a price chart. So let me go back here and show you. Here's GameStop, right? Let's see, I think I had a 30-minute chart up earlier. Now the question is, how would I know to be a seller of GameStop? Well, let me show you one reason why you would have known. Actually, I'm going to change this to 15-minute chart, a little shorter time frame. Well, what do you see here? This is happening now in last couple of days here in GameStop. So how would you know that you should be on the shorter side of the equation here? Well, if you look at what's happening at the bottom here, the Fibonacci cycle composite is telling us that long-term, short-term, medium-term, all the cycles combined are red and negative. So now we're looking at timing of shorting or buying put options here when we have cycle peaks. It ends up being an incredibly powerful filter to show us what side of the market we should be on. What swings do we want to look for, right? And you could go longer term time frame as well. Now, GameStop has been incredibly volatile, so when it gets more volatile, you want to start drilling down to shorter term time frames. So trading in the same direction, again, I'll get questions here in just a second, guys. I just want to make sure we have time to cover the content. Trading in the same direction as the Fibonacci cycle composite creates a potential advantage for traders. So let's set up some rules here. So how do we want to use this in the context of identifying the best swing trading opportunities? So I created two very simple rules here. One, with our tradable cycle, look for an upswing. All right, I'll change the color of my marker here. Look for an upswing, upcycle. That makes sense when we're looking to buy. Number two, I want to do it when the Fibonacci cycle composite is green. That makes sense because when it's green, it's telling me that the majority of the 3 to 5 cycles are bullish and swinging higher. So now I'm referencing that gold chart I showed you in the beginning of the presentation. You now can see that we have a cycle low. It's visible on our tradable cycle indicator. I'm using the settings of 5/8, which is one of my favorite for the tradable cycle. But look where that cycle low is coming in. It's a positive value for this Fibonacci cycle composite. Look what happens, a big upswing. And then we have some more cycle lows here that unfold over time, but they unfold when the Fibonacci cycle composite is green and positive. Are we tempted to sell at all during this big up move in the beginning of my chart? Like for example, let me clear my ink here. Right here, this is a very well-defined cycle peak on my chart. Am I tempted to sell short there? Not according to these rules, right? I don't want to sell that because my Fibonacci cycle composite is telling me that the tide, the strength of the tide across the board with all the cycles are bullish. And I would be actually going against the trend, against the strength of the market. What about bearish? What about opportunities when we can sell short or buy put options? Simple. Look for a downswing in the tradable cycle indicator. Number one. Number two, look for the Fibonacci cycle composite to be red and negative. So now I'm looking for cycle peaks to unfold when the Fibonacci cycle composite indicator is red and negative. So this ends up, it's kind of funny. I find a lot of indicators, by the way, that are totally useless over time. This has ended up being one of the most powerful indicators that I've discovered, and it's become one of my favorite. And the reason why is because it makes it very clear in real time whether to focus on selling the downswings or buying the upswings. It's a filter. So in the beginning of the presentation, I told you could recognize in real time the upswings, that you should have been trading those in gold. And we can do that now because we've got the Fibonacci cycle composite here as our filter. So the first, we'll call it 40% of my chart, we would have known to focus in real time on trading the upswings. And then when it starts going negative here, we would have known to start focusing on the downswings there. And then when it goes back positive again in the right side of my chart, we would have known to finally focus on that upswing. So it becomes a very powerful tool to put the odds in our favor of what cycle swings for any market to trade. And I promise I'll get to questions here in just a second, guys. So Fibonacci cycle composite could be the ultimate swing trading filter. I actually think it is. I mean, literally. And I'm always looking for better tools, guys, but this is absolutely one of the best tools I've seen. And that's why we can look at, and we'll go to real charts here in a second, but we can look at what's happening right now in the markets. GameStop, I mean, would we have known to be shorting? Absolutely, all day long on a shorter term time frame here. If you wanted to do that, you would have known that you want to be in the short side of the equation. Simple, because Fibonacci cycle composite, along with your tradable cycle, is negative in red. And so that tells us that's a great example. It's happening right now in the markets, what side of the market to be on. And that's really the ultimate question. So what side of the market should I be on, number one? And then how do I time my entry and exits, right? So Fibonacci cycle composite, again, is a great filter. So let's talk about how do we trade this? So we have the opportunity aspect of this. This is the fish finder, guys, right? This is not telling us how we capture these opportunities, but it's telling us what opportunities we want to try to go after. So let me show you an example trading idea of what you can use for this. So now, number one, how do we identify the opportunity? I just showed you the 2 steps before. But now this is assuming we've identified a tradable down cycle where the Fibonacci cycle composite has confirmed it. Second thing we want to do is what's called drill down and take trading signals. All right, so let's assume we're using a daily chart now to find a trading opportunity, a downswing. So what direction here should we be looking at? Well, you've got a red and negative Fibonacci cycle composite, so that means we're looking for cycle peaks. We're looking to short the market and to potentially profit from down moves, right? So shorting means, or buying put options means we're putting ourselves in a position to profit from falling prices. So this is the opportunity. I highlighted the shelf life. We've got to understand that. That's one down cycle swing. This is a daily chart. So this is the opportunity. How do we trade it, right? Let me show you a really cool idea on how you can do this. So now I'm drilling down to a shorter term time frame. So our opportunity, the swings we were looking at was on a daily chart. Now I'm showing you a 30-minute chart. This is what we want to use to actually help us generate our trading signals. And one idea for doing that is a very simple breakout logic. How does this work? Very, very simple. And what I do is when prices fall below, and I'll use my magenta here, prices fall below the lower blue line, that's the lower breakout line, I'm taking my sell signal, or I'm buying my put options. As soon as I do that, I put my stop above the upper blue line on the top. And as it falls, so hopefully it goes in my direction. In this case, it does. I'm moving my stop down with the upper blue line. And then finally, prices break through that, and I'm out. I'm done. So I have a way now, by drilling down to a shorter term time frame, to actually give myself quantifiable, no gray area signals and where to buy and sell a market, right? And take advantage of these trades. So this is one way to do it. There's lots of other powerful ways to do it as well, but this is a very simple way to take advantage. In this case, we would have sold gold future short at 1358, and we would have offset or covered our position at 1330, and we're capturing per contract about $2,700 and $2,760, if you will, right? And these opportunities, I'm here to say, happen literally all the time. And we'll look at some live charts here in a second. Now, will every trade be a winner? Will every trading opportunity using these rules be a winner? Absolutely not. We know better than that. Professional trading is always about probabilities. We have to factor in our losing trades, but at the end of the day, we want to keep our losing trades small and consistent, keep them the same size, because we never know which trades will be our winning trades. And then we want to put the odds in our favor as much as possible. So this could be an incredibly powerful way to approach the markets and approach trading. Here's another example here. We see another cycle peak, and I wanted to include this because there's a little bit of noise here. You know, like as the up cycle here, it's a little bit choppy, you know, and sometimes you get that, right? We have our cycle peak. Are we tempted to buy anywhere along here? No, because the Fibonacci cycle composite is red and negative. So now we have another downswing. And notice here that I have a highlighted area, but the chart keeps on falling, right? Gold keeps on falling after our downswing. Are we looking to take advantage of that continuation? And the answer is no, we're not. Not if we're swing trading, guys. That means that we're not trend trading here, we're swing trading. So we drill down for that one swing opportunity. We're now applying the same logic. Prices fall below, right, the lower line. We short it, and then we move our stop, put our stop in immediately above the upper line. And I usually put it in about 1 tick or 1 cent above it, right? And then when prices finally break above it, super simple. This case is a winning example of $1,870. Remember, also stating the obvious, guys, there's a risk of loss too when trading. I'm showing you a winning trading example, and you'll be surprised how many great opportunities there are when you're doing this 1-2 punch. A, I'm finding the opportunity using the Fibonacci cycle composite and the tradable cycle. B, I'm drilling down, use a shorter term time frame to take my signals, ends up being incredibly powerful. Here's another example right here of a downswing. I'll just kind of cycle through a couple. I'll take questions here in just a second, guys. Thanks for your patience on this. Here's now in this chart, here's a crude oil 120-minute chart. Are we buyers or sellers? Well, the Fibonacci cycle composite on the bottom of my chart, and I'll circle this here. What color is it? It's green and positive. We're not tempted to sell. We're looking to buy here. And now we're using a tradable cycle indicator to time that. We want to get in at cycle lows. And this is on 120-minute. This is much shorter term trading. You may want to take your signals on a 2-minute chart, in a drill down chart, or a 5-minute drill down chart. So it's just a shorter term chart where you can actually take your buy signals. And this may be a trade you hold on to for 2 or 3 hours. And maybe a trade that you end up making $500 on, right? So shorter term signals. But the great thing about this, that I really love about this, is we're never tempted to short. We're on the right side of the market with the Fibonacci cycle composite, right? Continuing, you know, up moves here. What about an example where you kind of go back and forth? So first part of my chart here, you can see we have an upswing. Why do we have that? Well, we have a cycle low that coincides with a positive green Fibonacci cycle composite. Again, another cycle low. This one fizzles out a little bit. You get a little bit of upswing there. Now we're looking to short. Why? Because we have a lot of negative red values for the Fibonacci cycle composite. You get a little bit of neutral area here. I'll circle this in blue. This is a little bit neutral. It's not really either negative or positive. But once you start getting your cycle peaks that are underwater or negative, that's our cue to look at potential downswings. Once you get your cycle lows coming in at a positive green value on the Fibonacci cycle composite, last upswing, that's what you want to focus on. So you see how that comes in. Cycle lows, positive green is a bullish potential trade setup. A cycle peak with a red and negative fib, that's a negative, right? You're going to be shocked at how easy this is and how often you can find these setups. Here's a cycle peak happening right here with a negative red Fibonacci cycle composite value. Are we tempted to buy the cycle low before that? No, because it's a negative value of the Fibonacci cycle composite. At least according to these rules, you want to stay with the dominant cycles, right? When you add them up all together. Final cycle low, do we want to buy that? Yes, that's a good potential upswing right there because we have a positive green Fibonacci cycle composite. Here's Bank of America, very non-volatile stock. This is very short-term moves here. You can look at this, right? Fibonacci will tell you what direction all of the time frames are swinging. Incredibly powerful information. So again, you get cycle lows at green and positive, cycle peaks at red and negative. Very, very simple to follow here, right? And so you can see here, gives us in the right direction. Now, let me quickly go over this, guys. I'm running out of time, but I'm going to answer questions here. For those of you asking, Mark, how can I get this tool for my own trading? Let me just touch on that quickly here. Tradable cycle swings happen all the time. I'll go to live charts here and take questions. Now, swing trading is wonderful. Why? Because we see them all the time across all time frames. Now, sometimes the quality is a little bit noisier and you don't get a clearly defined swing. Stay away from that. There's plenty of great opportunities where you have a very well-defined swing. So swing trading is a great strategy for stocks, options, crypto, futures, Forex. The Fibonacci cycle composite shows us when a number of cycles are all aligning together. So it helps us identify the best swings to trade. Now, here's the really cool thing about it. There are no settings other than color. So you don't have to worry about complex settings. We've done all that on our side. So we've used the golden ratio to determine what cycles we're going after for the long-term, medium, and short-term settings. All you have to do is pick the colors on this when you set it up in your chart. Works for stocks, options, futures, and Forex. And then we had our developer develop this out for TradeStation, Thinkorswim, TD Ameritrade, TOS, Ninja 7 and 8. I didn't put both of them up there, but it's for both. eSignal, Infinity, IAT, and Wealth Chart. So it's for all of those platforms, and we give you a multi-platform license, so you can download more than one for the same price. TradeStation, Ninja Trader. We just ask that you just keep it for your own personal trading. I also created a workshop, guys, because it's very important that I want you to understand what I've discovered about this powerful indicator. In the workshop, I call high profit composite swing trading. I include finding high profit swing trades in stocks, options, futures, Forex, selecting Fibonacci timeframes for cycles, my top bullish composite swing trading setups, my top bearish composite swing trading setups, how to enter and exit swing trades, how to trade options on high profit composite swing trades, futures and Forex examples as well. Learn how to target composite swing trades. So here's the promo we're having for this event, guys. Normally this indicator by itself is $497, but I'm throwing in a couple bonus indicators. I think you're gonna love them. So number one, I'm giving you the Fibonacci cycle composite. It's a main indicator here, but I'm also including our tradable cycle, the top cycle indicator. And not only that, I'm giving you a more advanced version, the plus version. I'll show you what that is in a minute. Also, if you're interested in trading the example I just gave you with the breakout lines, I'm including that indicator as well. So you have 3 indicators, and the workshop, normally this all goes for $1,188. We slashed it down 60%, guys. So you can get all 3 of these indicators and the workshop. It's already been recorded on demand right now if you go to the link here. So it's www.toptradetools.com/yes. All right, so give us a call if you have any questions, 859-963-3445. Thanks for your patience, guys. Let me go ahead and answer some questions. I'm gonna go ahead and reduce the size of my chart. So this is for, one question I have is I'm an investor, Mark. I never use my charts. Should I get this? And my answer is no. If you're not using your charts, guys, if you're not a person like I am, who's really interested in how to learn how to trade yourself, how to find the best trading opportunities, that's what this is for. If you're a person who's interested in trading for a living and really understanding how to find the best setups, I absolutely would recommend it. It's one of the most powerful filters I've ever seen for finding great swing trading opportunities. Does it work on every trade? No, it doesn't. It fails sometimes, like any pattern out there. But you'll be shocked at how many opportunities there are, as you look at different markets. So when the question is gold, let's take a look at gold, in terms of what it's doing. Well, you're going to be on the long side of gold, for the last part of Friday, and it's been heading up a little bit. Let's look at different time frames. 60-minute time frame, by the way, is a pretty good gold time frame. You can see here when it started heading south, Fibonacci started turning red and negative. Now, are you a buyer of gold? Yes. Close to the end of the day on Friday, what's the Fib doing? It's now positive and green. So this will be one where you can start looking at getting on the long side, right? So this is real time, and it works across all time frames. Mark, can you look at QQQ? Yes, let me put that up there. And I'll get to your questions here. So this is, you can see even lately for QQQ, it's been red and negative. So you're really focusing more on the short, on the 60-minute. You can look at daily. So how's it looking on daily? I mean, this has been green since we'll call it early November. Well, what has the NASDAQ on a daily swing trade been doing? It's been up and away. All the daily swing trades on the positive direction for the last couple of months have been green and positive. This is where it's so incredibly powerful. So if you're looking, to trade the daily swings in NASDAQ or any stocks for that, stock indices for that example, what side of the market would you have been on? You would have been a buyer all the way up there, right? And so that's how powerful it is. And just answering the most important question for traders, and that is, what side of the market am I on? DJ, so yeah, this is the promo that we have for this. Do we have a scanner? We haven't created that yet. It's a great question. We don't have a scanner as of yet, but we could consider doing that. The problem with scanner is that it doesn't translate the same across all platforms. So let me just continue getting questions. But we might develop that one. But it like TOS has a different scanning capability than Ninja, than TradeStation. But we might look at that at some point. So you get the indicators. So this is not an alert service, guys. These are the indicators for you. So you literally can apply this to any time frame and any market you want on the trading platforms, and you can download it for more than one. TradeStation, you can get it for wealth charts, you can get it for Ninja 7 and 8, all the same promo price here, guys. We just asked that you keep it for your own personal trading. All right, the honor system there. But what we do extend for you is that you can download it for multiple platforms, guys. So we're traders too, we get it. You know, sometimes you have more than one platform. And so we're not nickel and diming you here, guys, with that. Works on, when you say works on Mac, yeah, I mean, if you have the platform like TOS, is this a yearly charge? No, Kevin, you own it. It's yours for life. So, yep, it's a one-time charge, guys. It's not a yearly charge. So when you say Mac, I think what you mean is if you have like TOS or TradeStation downloaded for Mac, it will work. It's more platform-centric. So you have to have one of the platforms that we suggested here. But if you're interested in becoming a trader, I would highly recommend looking at some of these platforms, because that's where you get your powerful tools from. So you can use futures, including micros, all day long, Raj, all day long. Let me throw that up there. Soybeans, what's soybeans doing? So here's beans, a little consolidation here, but look what it's been doing, guys. Where's beans been going forever now on the daily chart? Since really August, you would have been a buyer of soybeans. Where's soybeans gone? Literally from $8.95 all the way up to $14 or $14 a bushel. I mean, massive bull market here. And look at all these incredible buying opportunities all along the way. And the fib is keeping you focusing on the positives. This is one of my favorite. When you get this elevated cycle low here with a positive green Fibonacci reading, those end up being incredibly powerful. That's really when things are taking off. Normal cycle lows, I mean, you get some beautiful trading opportunities here. So absolutely, I mean, tell me any commodity or futures market and I'll throw it up there. So this is not a scanner, Kevin. This is a chart indicator. Now you can connect this. You know, like for example, if I wanted to use like a watch list, you can cycle through a bunch of symbols, so you can do it with that. But this is what you apply to the chart to look at yourself to see if if it's a trading opportunity, if that makes sense. All the indicators. See here. Hey, Elena. Say all indicators are stunning. Oh, thank you. How about two wonderful presentation? Thank you, Elena. That's very kind of you to say. Well, let us know. We're happy to help if you have any questions. Okay, no, I get that, but I'm looking for this. I'm looking for a scanner. So Kevin, I'll keep you posted. Send us an email at support@toptradetools.com. Guys, I'm a trader, right? So I understand this stuff. Meaning that I get why you're asking. If you're interested, say, hey, tell Mark I want the scanner. If you guys make one, we'll keep you posted on that. And then we can definitely give you a shout out if we make that, because I get it. It might make sense to create that. Mark, can you look at ES? Yes, here's ES on the daily. So really since early November, you're focusing on the upside here. Here's a great setup, guys. Would we have known in the Corona sell-off, right? This setup right here is gold right there. Look at that. And by the way, let me show you another thing. See the cycle indicator, the tradable cycle? This is what you get. See how the middle line, the zero line right here, is the same color as the fib? So you get the green color if it's fit, or red. So this cycle peak right here, let me clear my drawing here. This cycle peak is coming in at a red and negative value. Stocks got crushed, right? Would you have known to become a buyer in early April? Yes, because the fib starts turning green and positive again. Okay, do you send out alerts? So this is, Kevin, for something, do you send out alerts for something? I'm not sure I understand the question. Corn, guys, I'm running out of time very quickly here, but let me throw up a few more. Corn, guide up and away. It's been bullish in corn since mid-August on the dailies. So all day long. Now, shorter term, if you're trading like intraday, let's put it the 15-minute, could be negative. So it's been kind of back and forth. Beautiful short setup here, right? You have the peak that's coming in negative fib right there. Really nice little short-term sell-off. You have some buying opportunities here in the short term. It's been a little back and forth, honestly, but corn's been looks like locked in a little bit of a range here for the last couple of days. Okay, so no, I didn't. Okay, see here. Raj, I think I got. So you get futures included. Gene, okay, can I download for TradingView? It's not We haven't created for TradingView, but let us know if that's what you're looking for. The only reason why we haven't is they've got a monthly fee for us that we've got to pay. So we need a certain level of demand there for it to make sense, if that makes sense. Scott, yeah, no problem at all. Let me just close quickly because I know Jeanette's got to take over here, but this is the promo, guys. You want to go to, let me just type in the link again, www.toptradetools.com/yes. This is going off the board after today, guys. So even if you come back and pay full price at 1188, guys, I still think this is a great indicator. Again, if you're not a charting person, if you don't use charts, if you're a long-term investor, I don't recommend this, guys. It's really for people who are more serious about trading and finding your own trading opportunities for any market, crypto, futures, options, Forex. It's kind of for you, the people who are interested in learning about chart analysis, technical analysis, finding the best trading opportunities as well. Yeah, you can trade 5 and 15, absolutely. I showed you a 15-minute GameStop. Yeah, you could definitely have. So yeah, Troy, send us an email at support@toptradetools.com. Just say, hey, I'm looking for TradingView. We can keep track of that. We just need a certain level of demand there for that, if that makes sense. So guys, I appreciate your time coming out today. Thanks for letting me present the Fibonacci cycle composite. And I will turn it back over. I think Jeanette's probably ready to take over here.